Type 9.
Then we go into the data and kind of what is the data telling us based on what we saw on Sunday, and then the technicals, and then we'll get into your guys' questions. So as always, you guys can post your questions in the Discord channel, and we'll get to those on the back end of the stream. So with that, I will hand it over to T, and he's going to walk you guys through the macro breakdown of the market so far.
Okay, good morning, guys. I hope that you guys are ready for a quick little breakdown. Just wanted to cover the macro here. So there is a little bit of things that I wanted to show you. The first being from the research report channel. Just wanted to pull up a few things. So from the macro perspective, we've had one-day performance in the S&P 500 yesterday. Basic materials was your most highest performing sector, followed by energy and utilities, which were kind of muted. A lot of the market was muted yesterday. Financials and technology were the biggest losers. And in the past 1 week, we've had materials and consumer cyclical or discretionary being the leading sectors. Energy and utilities being the second most sought after, and the rest kind of an average 1.5 to 2%. Real estate, financials, consumer defensive, healthcare, these have been lagging sectors, which I had mentioned in the previous live stream that healthcare is a sector that we will pivot to if we have a need for a hedge. So apart from that, there are some individual names that I will highlight in a little bit when I get into the technical portion of this. But from the macro perspective, the trend is still pretty strong. My target still remains, this very clear 5750 all the way up to 5800 target level here. And that is mainly only going to be driven by when the NASDAQ decides to break out of this structure that it is in right now. We've had multiple days of consolidation here. And we have been just grinding slowly higher. Obviously, we could see the NASDAQ break or reject here, depending on how the price action goes. But if we do break out here, then the next above us overhanging resistance is going to be around 20,500 to 20,750. So that'll be something that I'm looking at from the macro picture. Now, IWM, small mid caps, ranging. You could draw a box around this and trade between it if you wanted to. But from the macro perspective, we are not far away from all-time highs. So we do want to see this move up to the 230s, which is about $10 upside target. And then after that, 245 eventually. But we're playing this, kind of pivot to pivot. It still needs to break the 226 level for us to actually get any legs. On top of that, you have bond yields, which I've spoken a great deal about this. So let me just give you a quick update. The long-term view with bonds is that we want bonds to move further down before the next move up. And now in this chart, we're looking at the 10-year yield. So if the 10-year yield goes up, then the price of bonds come down. So if you look at, for example, TLT or TLKH, you will realize that it's actually moving down further. And so I see that in the short run, the 10-year yield may want to pop up to retest a couple of backtest levels here. Now, I had drawn this region out before the last live stream, and since then, we came up to perfectly tap it and then move back down. So I'm fully of the view that this move up here will eventually be faded as well if we have overhanging, price action that supports the move further down. And that may send the yield further down, which then in turn is good for stocks in general, right? At the same time, you have the dollar index, which is still sitting firmly in this demand zone. And if it breaks below, I've already mentioned, this is also another good thing for stocks because it supports their price in terms of the dollar parity. So these are two things that are slightly aligning with a potential breakout, but the yields climbing higher today is going to face a little bit of a problem with technology and high beta sensitive stocks. Apart from that, the VIX is firmly down in the $15 level, which is now back to normalization. As you guys know, you have 11, 14 to 21 are your normal levels for VIX or slightly elevated for VIX, and then you have higher elevated levels that go further up. So we're in the normal range right now, and yeah, that's where I leave my macro update for today. It looks like we still have a little bit of upside before a little bit of rejection. So I'll let Andrew get into the next part of this. Hello? Oh, Andrew, I think you're muted.
Hey, good call. Can you guys see my screen?
Yeah,
All right.
I think so.
Let's get into the data side because there was some things that changed. So the first thing I want to note is just as we look at options flow from Monday and Tuesday, it's been extremely bullish. As you can see, they've been steadily increasing calls. This was just yesterday. You can see just the massive increase in calls and the decrease in puts. You can see that the money is flowing towards the call side right now. You just look at basically, the last 5 days of options flow. It's massively to the bullish side. Right? You don't one of the things I look for when I'm looking at options flow is, are they stacking calls against the trend? Right? And as you can see, when there was these sell-offs, they were continuing to increase their call positions. You can see the increase in call positions. So until something changes, I tend to lean towards this move to the upside. Right? So I'm always looking at the flow of money. And if we look at our week, go back and we look at the playbook and we go back to what is the weekly range, our upside target is 475 or 575 right here, right? We can take a look at our weekly range. We're still looking for this 575 area. And that kind of seems like the direction we're going right now, now that we broke over 570. So if we go back to our gamma levels, we can see here that 570 was the biggest level. Right, and so we're currently over 570 right now. We are in a positive gamma environment, as you can see. Biggest level now is 575. This is your 575 level. If you look at this on an individual week basis, you can see that 575 is the next level. So as long as we stay above this 570 level, that's really the important piece. And there was some changes to dealer positioning. If we go into this right here and we scroll down into dealer positioning down here, you can see that there was a few adjustments. So right here, this little line right here, you can see buying pressure off of that 570 level. But that wasn't there before. And so that's kind of the key thing that we're watching now is, again, 570 is the biggest gamma level. Now we can see that there's buying pressure there. And that takes us to the chart where we actually look at the price action of what's going on. I put these arrows here so you guys can see this is kind of the pathway that we're on. We didn't get any type of drawdown. The market got bought up pretty aggressively off of these lows. If you look at the last 4-hour candles, right, I like to look at longer term things here, you can see that every 4-hour candle is getting bought off of this 570 level. So if you know that the dealers are short here, and so over 570, they have to buy in order to hedge their risk, and you look at the price action, and the price action is getting bought off of 570, essentially, you shouldn't be shorting the market unless you get below 570 and that buying pressure dies. And right now, you're not seeing that. So you can see this candle. This was the one, the little sell-off that we had early in the morning. Right? We had that rejection right here. We had that little pullback, and you can see if you look at this on the hour, right, it doesn't really signal anything, but then you look at the 4 hour and you can see that that candle got bought up all the way. It's still closed above that 570 level. So that 570 level is still in control. And right now we're currently holding it pre-market. It doesn't really matter. I want to see what happens once the market opens and that volume kicks in, and do the buyers step in. So right now, the way things look, I lean with T. I would not be surprised if we saw this thing push up into 572.90 high here from the 19th. If we break that, then there's a good chance that this is going to get pulled right up into 575. Now, this is where it gets interesting, because if that happens, then, right, if that happens and we break 575, that selling pressure dies here, and this can go even higher up into that 580 area, right? And if we look at SPX, I always like to look at the two together because it gives me a full picture. If you look at SPX, the biggest level right here is 5750. And so that's your big wall right now, right? It's that 5750 level from the SPX standpoint. And then if you go in and you look at SPX on this piece right here, and you go into dealer positioning, and I posted this, I believe, early in the week or over the weekend. I can't remember exactly what I did. Where's the, it loads real quick. There we go. And then if you get to this piece, right, you can see, where is it? This one, 5750. So 5755 buying pressure. So dealers would get some squeezy action there. So, and then you got selling pressure at 5800. So if you get over that 5750 on an SPX standpoint, we could see the market start to feel that squeezy pressure as it pushes up into that 575. If we break over that, then up into that 5800 range that T was just talking about. So, T, do you want to go through anything on the technical side?
Yeah, sure. I think there's a bunch of setups that I want to show you guys. So very quickly, and this is mainly just looking at unusual options flow that's been popping up on our research reports channel. So the first one I want to highlight is PayPal. Now I know not many of you might be familiar on how to read these charts, and you know we will.
Are you showing your screen, T?
Oh, I'm sorry. I think I'm not showing my screen. Sorry.
No, good.
My bad. This one. Okay. Sorry, I should be showing my screen now.
There you go.
So
yeah.
The first one that I wanted to highlight, and you know, I'm aware that some of you might not know how to read these charts, but I just wanted to point out that these charts come in through the grapevine to us. We, you know, analyze them as much as possible, and we talk about them on the trading floor. We'll have a separate session, of course, trying to teach everybody how to read these charts, but essentially you get two types of charts every day through the research report channel. One is a OI change, and then one is a volume change. And both of these charts are kind of telling you a different story. The OI change gives you the positioning that's changing day over day. The volume gives you the position that's changing intraday. So one is more for an intraday use and one is a day over day. But one of the highlights from yesterday, and there are a couple of them, is PayPal. And looking at PayPal here, it looks like there's a bunch of mixed action, but what stood out to me the most was that 79 puts and 72 puts are being bought pretty close to the ask here. And then there are some $100 calls that are being sold on the bid, and some $80 calls that are sold at the bid, $79 calls that are sold at the bid. So this does show me that PayPal is actually kind of setting up for a potential bearish positioning or a pullback of some kind. Now, if you just go to the chart really quickly, let me pull it up. Where's my PayPal? Sorry, right here. You'll see that we hit $78 yesterday or the day before, and then we have been kind of hanging out above it. But these candlesticks here have been showing a little bit of weakness, just not overall bullish strength that's been accumulating here. And so I want to obviously wait for a confirmation. And that means that, you know, getting into the 15-minute chart and kind of creating that frame in which we can trade from, that would mean that we're looking at a potential 78.83 rejection, which heavy volume selling, and then the break below 77.30 will give us our trigger entry if we get to reject it. So we need to come back and close below this, come back up, try to recapture this. If bulls fail to recapture this area here, then we will likely see PayPal fade to the downside. Now, these calls and these positions that I just showed you are for October expiry. You see some of them are for October, this one's for January, this one's for this week expiry. So there is a mix of them. I try to only pay attention to the top volume. So PayPal, that's what I'm looking at. That's something that I spotted out here that I wanted to alert you guys about. Be careful taking a bullish position on here. It looks like a market maker or someone is trying to position for a bearish position. Next one was PDD. This is a very straightforward tape to read. In terms of volume, this is just full outside aggressive calls on multiple lines of strikes, multiple lines of expiry, some going up to 120 for October, and then there's a whole bunch for 115 as well. But of course, the most important thing is the sold puts for November 110 strikes. So if you look at this thing, and just pull it up, you'll see it's already trading at 113. And so they've sold some 110 puts, which means that they're hoping the price will stay above 110, which means PDD still has some legs to move to the upside. Now, I don't want to obviously take this trade just right away, but this in line with the 11% move yesterday was quite a big move. And I don't want to ignore it, but I want to also let it play out and let it bounce off the 110 level and see where it takes me after that. So that's the second setup here, bullish PDD. First one was PayPal bearish. Rejection. And then I'm also seeing from the macro standpoint, another interest that has been popping up is EEM. What is EEM? It's emerging markets. They're emerging market ETFs that are being bought up, bid. And so this is another opportunity for those of you that are trying to diversify your, trading lingo. You want to diversify the types of things you trade. This could be one of the things that are worth a look. I'm not really going to go into the technicals, but this is more of a macro side thing. And then next up over here is Amazon. Which once again, see the 195s on the bid side being sold. That could be profit taking, or it could be actual people selling calls at 195. Another one, 192.50, and this all for this week expiry. So I would firmly think that Amazon would have a tough time breaking out of this until and unless these people get squeezed. All people have taken profits off these contracts. On top of that, you have some 190 puts that are being bought at the ask. 40%. You have some 200 calls being sold once again. So you can see this kind of price action is very indicative of a potential temporary reversal. And these are pretty short expiry, so it's expected to happen this week. And so this is just one way that we get these technical understandings from some of the research reports. And those are the ones I want to highlight. And yeah, I hope that's helpful for you all.
All right, so what questions do you guys have us before we wrap up this morning's live?
Yep, if you have any ticker breakdowns, you want us to go through any charts, put it in the chat right now and we'll get right to it. We also hope that you've been enjoying this call-out stream. We intend to do more of these in the future, but for now it's going to be the Sunday and Wednesday ones, which are going to keep you guys pretty busy. So we don't want to increase the intensity without, for you guys to have too much to do as well.
One thing I saw yesterday was silver saw a lot of, I don't know if you saw this, T, but I kept getting scanners popping up, 38 orders, 1.2 million, 30 calls right here, 58 orders, 3.3 million for November. This also popped up on gold about 2 weeks ago before gold went on this massive run.
Oh, yeah.
We saw something very similar.
Yeah.
Right here, you can see 22 orders, 250 calls for October. It was 2.59 million. That was back on the 18th. Mm-hmm. And I want to say there was even more gold. So we're seeing quite a big influx in those metals.
Right. Also, another thing that popped up on our scanner yesterday was AMD. They've been buying a lot of calls behind that.
Yeah, there was.
Quite a bit of AMD flow on the Goldens yesterday. Almost repeat activity. Obviously, we want to see if they continue building that position. It doesn't really mean one day of buying says anything. So, but yes, I do see the silver right now. It came through the unusual flow right here. I see at least $1 million worth of bets right here, just off the unusual flow.
Yeah, because that came in right here on the 18th area. And then this is the move that happened since then.
So I think somebody's asking about NVIDIA, and I'll just cover NVIDIA from my perspective. I think that this is a really simple trade right now. You don't need to overcomplicate it. You just have two really basic pivot points, and if you stick by the pivot points, you really can't mess it up. So if you get a break above this 121, 122 level, which is where we're close to trading right now, and we start to form a base above it, you're likely to go up and try to clinch onto the 130, which was the previous local resistance in this area. But if you get a rejection at 122 right here where we are, then intend for NVIDIA to come down back again into this box that it's been in, down at around 113 or so, 114, 113, this range. So then it continues to bounce around. But NVIDIA has been squeezing, and yesterday's price action was actually indicative of a potential buyer in stream. So I wouldn't be surprised if when NASDAQ takes off and everything starts rallying, NVIDIA will be one of the first few ones to just zip up to 130. Of course, I think Andrew will have better data in terms of the gamma exposure, so I'll let him do that.
Yeah, and I'll say this is a great example of why understanding where the market makers are and where the dealer positioning is so important, because to the casual person, you might have just seen this pump right here and been like, what the heck, right? But when you actually look at the data, you can see that 115 was buying pressure. So what does that mean, right? If we go back into this, we take a look at NVIDIA. And unless it changed, it was buying pressure. But if we take a look at this, right, we can see it has 110, 120. Yeah, so 115 right there. You can see that little line right there. That's buying pressure. You can actually see there's buying pressure at 120 also. So pretty simple evaluation. Then we can take a look at the gamma exposure. And we can see that 120 is the biggest level. So you're above 120, so that's a good sign, right? We now know that there's buying pressure at 120, so we're going to add that real quick. And then you can see the bounce off of 120, right? And so this is where this information is important to helping you with the confidence to either stay in your trade or, right, apply risk. So easily, if you're looking at this and you're seeing that buying pressure is 115, then you're like, okay, and you can see the order blocks coming in off of this 115 level. So you can know that the person buying right here is most likely the market maker. So the market maker is short 115, so they have to hedge their risk off of 115. As T told you guys, we're going to do a webinar where we break this down in more detail. And so you get this move, and you break that 120 gamma, and then you come back down into it, and you can see the buyer steps in again. Right? And so that's most likely the market maker. So back to T's point, if you break over yesterday's high, which is this, 121, 122 area, then there's a good chance that this goes up into 125. So, and then my standpoint, I like to look at things on a longer basis. This is the golden pocket. So if you clear this 125 area, there's a good chance this goes back up to 130. So you can see clearly, right? And if you take a look at this smaller time frame here, this is why I love the golden pocket. And you come off of this and you come down, you can see right where it bounces off of that golden pocket right there. So then your extension is sitting up here at around 124. So right now it looks like that's kind of the wave that's in process here, right? Kind of what you're looking at. As long as it's over 120, I'm okay with it. If it breaks below 120, that's where you kind of want to be careful. Now, when I say breaks below it, I mean the close of a candle below it, and I don't look at 5-minute candles. So, that's more on, you guys and your style of trading. I tend to look at longer time candles. You can see here on the 4-hour, this 4-hour candle holds 120. So that's kind of where I'm at with NVIDIA. All right. Well, there's no other questions. We're going to go ahead and wrap it up.
Yeah.
We appreciate you guys hanging out with us. We will be live again Sunday. go over a more in-depth, like we did last Sunday, breakdown for the following week. And like I said, me and T are working on some stuff for you guys, a webinar that's going to be coming out here in a few months to break down order flow and positioning more in detail than what we do on these streams. And so other than that, you guys have a fantastic morning, and we will talk to you guys this weekend.
Yep. Peace. Thank you for attending. We'll see you on the next one.